more and more puts every single week. You can see here just millions upon millions of puts have been hitting the tape that are mostly out of the money in terms of the strike, plus pretty close expirations. These are pretty bearish prints, and a lot of these are above the ask, as you can see here in order details. And it may sound redundant at this point that I'm talking about how many puts we've been seeing, but look at what's happened. Like, we saw this big rally back in July and early August, and they were loading during this rally. They kept having to roll their strikes, at least a decent amount of them were getting rolled because they were getting squeezed out during this time, but they kept loading as we started the downward trend during like these mini rallies, and ever since then we've just continuously fallen down almost to new yearly lows as of Friday. So they've been right at least the majority of the year. The only month they probably were wrong would be like July, but they were still right in the eventual downside move that we did have, which we are now seeing playing out real time. So pretty crazy, and as long as we are seeing this relentless put buying, there is no form of stopping, whether it just be a short or temporary relief rally that we see in the future or anything. As long as they're still loading these types of puts, it has shown us this year that they are going to eventually be right. Now, could they be wrong? By all means, yes. Nobody's right 100% of the time, but as far as we know this year, they've been right with all of these downward moves, and even if they were early, like back in July or early August, they still were right eventually. So you definitely want to continuously look and monitor the amount of these puts, especially like I'm doing right now in the historical flow tab. I'm doing the last week that we saw, September 19th to today's September 25th, and over for $1 million in premium. I want to see what big money's doing specifically, and just looking through all of these, scrolling down really quick, you see how many puts we were looking at. It's 94% puts to 6% calls for over $1 million in premium just from last week. That's even more than we saw in the previous weeks leading up to this downward move. So just incredible seeing all of these. Really is shocking because we have not seen anything like this in previous years. Clearly because we just kept going up. So this is definitely a odd year, as you've already seen with the market so far. And I do want to bring up the fact that we did break through some pretty key trend lines as we went down through this downward trend. So basically, I'll go to the daily here first to give a better sense. But in terms of the daily chart, we had a big rejection back in August, if you remember, off of this key trend line. If you drag it from the all-time high across here, we had a resistance on March 29th, and then you would see here that this is a key pivot and resistance. It touched perfectly and fell off of this, and so far we're midway through this channel. So you can see the same thing here. We have the top pivot here. If you drag it across to the June low that we have, the low of this year, then you can see this is a nice kind of like channel that we're in right now. And right now we're kind of closer to the downward side, but pretty much we are smack in the middle of this. Now, what's interesting is if we stay on the daily chart, you can see here we had the pivot level of this June low. You could drag it across to the July 14th low. You can see we broke through this level back on September 15th, which was very, very key because this level has acted had acted as a support for 3 other times previously. So breaking through this was very crucial for bears, at least, because that left a lot more sell pressure, as you can see with what we're seeing now. I talked about this in previous weekly videos, the weekly recap videos we've been doing for this entire year so far, which, by the way, if you haven't been watching, subscribe below. It is free. I've been talking about the key break that we would probably see of this level, and it did happen, and look what happened after. Just continuously fell down. Any news we saw was just ended up being bad for the market and just continuously fell. So the fact that we broke this, paired with the fact that we had a head and shoulders, a pretty thick head and shoulders on the daily, not a good sign, and that we saw the result of that after we did end up falling down here. So a very key downward trend, and that brings the question of what will happen next as of now. In my opinion, we haven't seen the exact low of this downward move. I personally believe we will see lower than this June low that we had right here. It doesn't mean that we can't have some type of mini rallies along the way. However, I do believe this will get cracked at some point, whether it be end of, this month right now or early October. This will end up getting cracked below. We'll probably see below there. After that, we might see some mini forms of rallies going forward because it doesn't just go straight down. Like we saw here, we had a nice 4-day rally that did take a lot of shorts out of the game before falling a lot further. And we'll probably see stuff similar to that after the yearly low is taken out because, as you can see here with this data, we saw a record amount of puts on Friday, and especially just last week overall. That is insane, the amount of puts that we were seeing. So that doesn't, when you have that much protection, especially with retail, you typically end up seeing some form of rallies just because people are way overhead hedged in the market, and the market does not like having that much lopsidedness to one side. It goes for calls the same way, but we saw a ton of puts there. And also with what I was showing you in the intro of this video, the sheer amount of puts we've been seeing from big money, just incredible. And typically we have to see some types of rallies to get them out of these positions. But yeah, definitely something to watch because of that much. If you are someone that wanted to go short for the potential break, like I said, of going under this level, you have to make sure there's good risk reward. Like for example, a retest of other levels that we have up here, because if you just short into the hole, you're not setting yourself up really good. Even if it does happen when we have a break of the low, you don't want to short when there's not good risk reward, especially when we saw as many puts as we saw, because that can lead to some nasty upside rallies that can squeeze you out of your short position. So you do not, the best time to do it was during these rallies up here, whether it be this rally during August, this rally over here when I personally loaded in September, for the short side. Those are the best times to end up loading it, not when you're already down like super far. Even though it has been falling a lot, you want to make sure you have good risk reward in every trade. That's what I want to ingrain in your minds for sure. But another thing I do want to talk about here is the dark pool levels. We haven't seen too much dark pool accumulation, at least what I believe would be accumulation around these levels. We saw 2.5 billion with a premium at this 374 level, but also 374 if we go to the SPY chart here. That's not very close to where we are right now. You can see 374 would be roughly like around this range, so we would like to get above that at least to show some form of at least accumulation around this level. For the most part, most of these dark pool prints that we saw throughout this week were either really small or much higher up from the current spot that we're at right now. You can see here SIG prints for the 867 million in premium. That's nothing crazy. If you have something that's below 1 billion for a day, that's not crazy at all. Nothing that notable in terms of signature prints. Same exact thing applies for today, 874 million, or not today, at least for Wednesday here, so 921. Again, couldn't even get over 1 billion in premium. Couldn't even get over 1 billion in premium on Tuesday. So we're not seeing signs of accumulation around this level. We definitely saw big signs of distribution though above here, which they definitely were selling before this big downward move. So if you are someone that wanted to load for longs, that could be literally anybody from a swing trade for a week or even somebody trying to go long-term because of the current levels we're at, you got to look at dark pool levels and see, are we looking at form of accumulation at lower levels on the chart? And if you're not seeing that at all, then you got to rethink, well, at least it's one variable. It's not the sole variable you look at, but that's one variable that's pretty crucial and something that I personally have used along this entire year and previous years to gauge sentiment on distribution and accumulation stages. So that's something that I like to use personally. We're not seeing signs of good accumulation right now. Again, like I said, there could be some form of rallies that chop around this level or these levels here, but for the most part, we haven't seen a major low sign yet in terms of accumulation, so you got to be careful of that. If you go over to Apple here, I do have my channel that I showed you guys on Twitter quite a bit from this past week. We did sell off the top resistance to this channel, so as of now, it looks like this thing wants to test the lower end of this. Maybe it tests here one more time before falling lower, but as of now, this is the structure. A break of either direction, whether it be below this downward or the support down here or the top of this resistance here, would mean that you have a breakout or breakdown, so definitely watch for confirmation. That's personally the best trade in my opinion, is confirmation above or below during this channel. You don't want to really trade it during the middle, just because, again, risk reward not the best when you're in the middle of the range. But another thing in terms of Apple is my main Apple chart that I have here, which is the channel that I've shared for many months now. In 2022, we have the bottom support here and the top resistance, and this goes all the way back to 2020, September of 2020 that is. And you can see here we have this big fake out candle to the upside on September 12th, which was bull bait, which I've shared in previous videos. Big bull bait candle because a lot of bulls wanted to get back into it since we got back into the channel after the big gap up. But then we gapped down big the following day and then fell down lower, retested it, and fell down lower again. Very, very bearish setup. This is super bearish on Apple, especially Apple in itself. You would not, unless we got back above on a weekly candle into this channel, you would not want to be long on this, at least at the current levels. Personally, that's my opinion on it, at least for the next few months, that is. But as of now, not looking too good for Apple, and this is the highest weighted stock in the S&P 500 and the NASDAQ, so you know it's definitely going to weigh on them going forward, especially in the coming months, October, November, and December. So you got to be careful. Look at Apple especially to get a sense on what could happen to the overall market, because these big big caps have a huge weighting. Apple, Microsoft, Tesla, all of those have a big weighting in the general market. So these can lead to a lot more downside if they are weak, especially. So you have to be very careful with that. And one last thing I do want to talk about in this video is the VIX. You can see here we had a very nice spike right into my box that I had before. I have not changed my box at all. We had a perfect spike, literally almost hit the top of this box, the tick here, and closed right below that level for this box here. So this acted perfectly. For anybody that says you can't chart the VIX, again, you have to work in ranges. It's not as precise as individual tickers, as I explained in previous videos, but this here shows that, hey, it is possible to do some type of chart work on here in terms of technical analysis to gauge resistance levels on it. Same thing with what I did around this range right here, like 35 to 37. Key resistance, we had 6 rejections in the past year off of this line. Same applies to right here. You do want to be very careful if we get above this box, because then that means 35 is pretty much set in stone for the most part. Again, nothing is 100%, but I would assume that 35 would be coming pretty soon after if this did break to the upside. But as of now, we're still in this chart pattern, this current chart pattern that we're in right now. So something to note as we go forward from here. But do appreciate you guys watching this video today. Continue to watch the dark pool levels and put flow, as that's given us a lot of useful insight, especially in the past couple of months so far, on the potential downward move that we are currently experiencing right now. But other than that, I hope you guys have a great week, and I'll see you guys on Wednesday for the midweek video.